Hi, this is PR Sundar. Welcome to Pre-Market Report sponsored by Delta.Exchange. US markets, the inflation data came slightly higher than expected, but not a very big deal, but still the markets fell. That is because of profit booking. And you may remember last 4-5 trading sessions, US markets have gone up so significantly. S&P 500 went from 4250 to 4410. So that's more than 4% in 4 trading sessions. And Nasdaq 100 even shot up more than 5%. And that too against the negative news like non-farm payroll data and then Israel-Palestine tension. So despite all these odds, the markets went up. So yesterday that came under some profit booking. Asia market is down, but GIFT Nifty is looking very bad. So it's indicating about 150 point gap down. So luckily this is happening on Friday. If this happened on Thursday, a lot of put writers would have got into problem, because on the day of expiry, people sell 100-150 point up and down call and put for few rupees. They would have got into trouble, and that will pull the market further down. But today I hope that even if there is a big gap down, the markets may stabilize or may try to recover a little bit. The markets not likely to continue to fall because of the option writers. So why there is so much of gap down? Infosys ADR is down by about 6.5%. But Infosys has already fallen about 3% yesterday here. If you take the ADR price into Indian rupees conversion, so it's indicating something about 5% further fall today in Indian markets. But option writers straddle, those who sold straddle, may not be in a big problem. That's because the combined premium for at the money straddle was about 5.5% yesterday. So even if it falls 5%, so the damage will be very limited. But the damage to the market will be high today, because if Infosys falls further, then TCS may fall a little bit, HCL Technology will fall a little bit, and Tech Mahindra, which has outperformed the IT pack for the last 1 month or 2 months, and that is likely to fall further. So this is a complete bearishness in IT sector. In fact, you may remember about 2 to 3 weeks before, the Accenture came out with results. They cut the guidance. The results were good, but they cut the guidance. So that is what exactly the Infosys has also done now. They have come out with the good results, but they cut the guidance. So that is what is rattling the markets now. So yesterday all banks fell except HDFC Bank. All IT stocks fell, but still market did not fall much, mainly because of HDFC Bank. But today, who is going to save the market? So as usual, banks, IT and Reliance, so these three are the major contributors for Nifty, but IT is definitely going to be negative. But will banks save the market? So only the time will tell. Why we are expecting banks to support the market? That's because yesterday the inflation data came much lower than expected. A lower inflation, expectation of lower interest going forward, that is actually good for banking stocks and auto stocks. So if banking stocks and auto stocks support the market, then the damage may not be very big. Up to 80 point, 100 point fall is okay, because the market have shot up recently. But 150 point, 200 point, that too coming closer to the like monthly expiry, there may be a gamma effect for the people who sold options. So anyway, October is how to say, very violently markets are moving, and result season is always expected like this. Assume that Sunday HDFC Bank comes with a very good result, the whole thing will change. right? Just now it is so bearish, it will turn very bullish. And because if HDFC Bank results are good, and all other banks will also go up. But whether that's going to happen or not, so we have to wait and see only on Sunday. But the result season, markets tend to be very, very volatile. So, Reliance yesterday has not done well, but it didn't do badly also. It was almost flat. So, who knows, maybe when everything is falling, the Reliance may support. But if banks, IT and Reliance, if all three are falling, so that is when the market can fall very, very significantly. So anyway, so I'm expecting 19,500 to 20,000 in Nifty with a very, very violent move in the markets. So because this violent move is happening on Friday, the damage may not be very big for option writers. So anyway, so today we need to watch for day before yesterday's low, right? And yesterday also Nifty closed somewhere near, if you can remember yesterday morning I told you we are trading at the upper end of the trading range. So I said, going long, the risk reward is not in favor. So that's what exactly now happening. Though market consolidated yesterday, now 150 point gap down. So it's a big thing. But however, if you are a very long-term investor, these are the good times you can buy the shares. And if you can remember, last quarter result time also, Infosys fell 10%. So that time, my son has bought some shares in Infosys. He bought it for about 1240 per share. And despite, market going down so much in last 2 days, but still he will be in profit only. So if you are a long-term investor, so these are the right times to accumulate the shares. And if you are a momentum trader, keep away, right? And even if you are a long-term investor, so if you buy the shares during this kind of panic, you just keep selling some call options to get some money. So those things maybe I will explain in another video. So right now the markets are bearish, but I feel that somehow markets may recover a little bit towards the end of the day and the banks may support. So that's my view. So let us see whether my view goes right today or not. So that's it for now. Hope you enjoyed watching this video. Thank you for watching.